All right. Good morning, everybody. Hope you're all having yourselves a fantastic start to the AM here. Happy Monday. And hopefully, right, what should be a productive and profitable week. Spent a little bit of time here this weekend kind of reviewing my trading, thinking about, how things are going. And yeah, kind of like evaluating right performance and determining, am I seeing the market wrong? Am I seeing the market right? Where am I making good decisions? Where am I making bad decisions? And do I need to make any dramatic changes to my trading? And the conclusion, right, surprise, surprise, is that I don't need to make dramatic changes. It's kind of one of those paradoxes or one of those things that's really challenging, I think, sometimes in the market, is that short-term feedback makes us feel as if we need to make long-term dramatic changes, right? And yeah, the end to the week there on Thursday, Friday, although not fantastic or didn't feel fantastic, not sure if there was anything that I could have really done differently that would have long term made me any actual money, right? There's going to be times where you are going to get faked out. There are going to be times where things are a little bit choppy. There are going to be times where things are smooth. There's going to be times where things are rough. And it is the consistency in the execution, right, that long-term creates the better outcome for myself. Now, that obviously doesn't mean that I can't make any changes. Doesn't mean I can't see some sort of adaptation. But when I look at October as a whole, we'll call October start of the month to sort of the election. So October at plus a week. It was some big moves, but some relatively choppy and indecisive price action mixed inside that PA. And so overcorrecting for that chop or overcorrecting for that price action is maybe a little bit of like a too dramatic reaction, right, to basically what was a challenging month in general, right? And so I don't know if there's any reason for me to make any dramatic changes here. And yeah, hopefully we can take advantage of whatever momentum, right, is available to us today. Now, the changes that I should be making, right, are self-imposed ones. So not necessarily strategy decisions or strategy ideas or anything along those lines. More about thinking, okay, how can I control my psyche, right, when I have a losing trade? How can I make sure that I'm not compounding mistakes? When I get faked out, right, not to want to like chase a revenge trade, do things along those lines. If I look at my performance over the month of October, it's the days where you kind of have those 4 or 5, right, 6 trades where things like don't really move in your favor or don't really move, or you kind of get those small wins, small losses that end up then having like a disproportionate amount of impact on my account. And just avoiding those sessions certainly sets me up, right, for a lot more success here long term. So that really is the priority. If you ignore those 3 days where you kind of had those types of price action, it's been a great month. And so it's basically just about making sure that, hey, have like a stricter walk away point, right, when the market doesn't behave the way that you expect. So that would be like step 1. And then step 2, right, be a little bit more proactive in protecting your profits in those choppy markets. So if all we're getting is evidence of kind of indecisive PA and challenging price action, don't get that like hopium, right, that things are going to be dramatically different or better or whatever you want to call it here this morning, right? So, yeah, it's the way it goes, right? This game, I wish it was a perfectly straight line higher, but it's not. And so we have to understand that it's the consistency here, right? The consistency in our thought process, the consistency in our approach the consistency in our technique, right, that allows us to survive those highs and lows. And the more and more we put pressure on ourselves to be perfect and to not make mistakes or to be green every day or to be entertained by the market or whatever pressure we might impose on ourselves, the harder it is to actually achieve those objectives. And then we struggle, right? We don't find the success that we're looking for because we have these impossible expectations that we can never meet. So I've said this before, and I'll try to say it again to remind myself here, but I am not here to be entertaining, right? I'm here to make money, and sometimes the lure to feel as if I'm busy or as if I should be trading more or whatever it is tricks me into taking trades that I don't want to take. And so that's the thing that I want to focus on here as much as possible. I'm not here to be an entertainer. I'm not Madonna or Cher or Celine Dion with a Vegas residency, right? I'm here to trade. I'm here to make money. And how you trade to be profitable is a lot different than how you trade to be entertaining. And yeah, just fight back against some of that pressure. Fight back against some of those like self-imposed limiting beliefs. And then from there, right, we'll be able to stack things up here and set ourselves up to be successful no matter how we choose to behave. All right. So with that being said, let's start mapping things out here this morning, figure out what we want to do, and then set ourselves up for what should hopefully be a successful trading week. So first things first, right, economic calendar here. Okay, it's Remembrance Day, Veterans Day, depending on which side of the border you're at. And certainly on bond market holidays, we're expecting relatively limited volume and historically relatively choppy or indecisive price action. So potentially, right, we still have some kind of catalyst hanging out there on the backdrop of things being sort of tradable, right, with FOMC, with the election, all those kind of things. But yeah, we're going to be wanting to be very strict, right, with sort of the narratives that we're falling in love with here today. So we're at a 2 out of 3 here to the upside, right, without volume. And we're at all-time highs. So we're looking for a continuation past ATH, right, for a nice move here towards, I don't know, 61, right, 6,100, something along those lines. So pre-market high is 54. So we'll go 6,500. And then the starting point here today, it's a 2 out of 3 without volume. So what are we missing? Right, we're missing volume as a momentum standard. So we need volume to return. If I don't get that volume, I will not trade. It's that simple, right? To the downside, same thing. If I can get a fake out at all-time highs, then I can look for a breakdown towards 6,000. Call it 610 or 6010. And then again, right, need volume to return. So 2 out of 3 here to the upside without volume. Very, very clear over what the confirmation standard needs to be. If I go into the strategy documents, right, 2 out of 3 here to the upside without volume means the confirmation standard, right, occurs on the first 5, 10, 15, or 30-minute candle that closes as yada, yada, yada. And we need increasing outlier volume. And then we need to see evidence of increasing momentum. If you have evidence, right, that means that it's relative to the previous bar as your confirmation or as described above. And we need to see larger volume than any volume bar we saw at yesterday's open. So it doesn't need to be bigger than anything yesterday. That's going to be challenging for us to get potentially, but bigger than yesterday's open or Friday's open when it's already relatively thin volume shouldn't be a particularly strict standard for us to overcome. Does that make sense? All right, fantastic. Okay, NQ, what's the count here? Yeah, 2 out of 3 to the upside without volume. So it's telling me I need to see volume here return today, right? That's what I care about. Without volume, I'm going to sit on hands. I'm going to fake out off of 2200, could be in play. Then break out past all-time highs. Right? So that would be 21,350. Then 21.4, yada, yada, yada. And again, right, we need to see more vol than Friday's open. Without that, I'm expecting the same choppy kind of BS, right, that we saw on Friday. And I have a zero tolerance policy for allowing myself to get chopped up, right? Not worth it. I think the good way of describing it, right, is like, feels like, you know, when you identify or you don't get that momentum, right? So you don't identify that continuation of trending price action, you get slap chopped, right? Like the old infomercial. And so you feel the sting, right, of the slap where it kind of hurts and it doesn't feel fantastic. It makes you feel kind of like a little bit embarrassed. And then you feel the pain of getting your account chopped up, right, and turning into something smaller. So that's what I'm trying to avoid, right? I'm trying to avoid basically that infomercial type price action. And that's all going to start by identifying a strong volume standard here to start the day off. Yeah, Adam, if we're going to see volume here today, right, on the indexes, we should see it on the opening 5-minute candle. So what we're going to be comparing is the opening 5-minute candle to yesterday's, right, or to Friday's open. And if we compare Friday's open to, say, Thursday's open, right, Friday was less than Thursday, so we had a decreasing momentum indication. Tuesday, right, we saw significantly less volume again than, right, compared to Monday. So we're going to be saying, do we have an expectation of today being a larger volume pace based on the opening candle of the day? Or opening couple, right? So if I don't see more volume at the open, when I'm expecting that to be the busiest time of the day, it's going to be quite the outlier for me to then get price action, right, outside of that time frame that is then unique or whatever you want to call it. All right, make sense, team? Friday's open, Norm. Friday's open. So it says right here, right? Need to see more vol than Friday's open. Right here. All right, CL, 3 for 3 here to the downside. First indication of trending price action, but maybe a larger move, right, than pretty much anywhere else. So does that mean that we have any setups here to the upside, or is this a pure bearish day? Hey, good morning, Bert. Yeah, bearish day, right? We have trending action here lower. So we're looking for that continuation, right? For maybe a breakdown towards like 66.50. We're at 68.50 right now. And then fake out off of maybe 70. And then a breakdown. Let's just check the Forex Factory here. Nothing today from a data perspective. So we'll see if this thing has a good continuation or good amount of continuation. Cool. All right. Apple, red candle, can't see the volume, decreasing volume, gap down. So 2 out of 3 here to the downside without volume. Kind of the opposite, right, of our indexes. So we're looking for a 229 breakout, right, or a breakdown on volume under, I don't know, 224.50. Okay, Tesla, everyone's new favorite sociopath, 344.60. Another monster gap up here this morning. So 3 for 3 here to the upside. And we're looking for like gap fill and go type situation. I don't know how many gaps it can leave in this run up. But this is probably the post-election trade. This thing has been a monster. Very, very impressive move. And then one thing to note right away, right? If we're possibly worried here about a chop day, right? Or about dealing with slightly more challenging market conditions, if our internals are telling us one story on Apple, one story on Tesla, well, we're probably going to struggle to get a cleaner narrative, right, to fall in love with. So if we're seeing a, basically choppy internal market, right, or mixed bag stories internally, we're probably going to expect a relatively slow and challenging day. And then again, right, it's also a bond market holiday. So there's going to be a lot of participants that aren't trading here today. So we're getting a lot of information that potentially is stacking us up, right, for a day of consolidation or like a muted move. Okay, Microsoft, inside bar here. And we're looking for that 427 breakout, right? Still that bottom up gap fill, right? And then to the downside here under 420, just because it's that period of consolidation. All right, Amazon, inside bar as well. Nailed that analysis there on Friday. And so we're looking still for that 212.30 breakout. Or, right, a breakdown under Thursday's lows under 207. Okay, AMD rejected at the trend line on low volume, right? So not great, but 2 out of 3 here to the downside without volume. So we're still looking for that 151 breakout, we'll call it, right? And then we're looking for a breakdown here under 145.50. Okay. AMD, lower low, higher high, so indecisive narrative there. Red candle, decreasing volume, gap up. So again, right, a 1 for 3 here to the upside, sorry, to the downside. And we're going to look for that breakout over 150 or a breakdown here under 146. So again, another narrative here where we're told inconsistent price action, not exactly strong momentum. So no reason to be hyper aggressive. Okay, Meta, inside bar. And we're looking for that. Still think I need to get out of this range. So above 602. Potentially could go under 575, but I don't know if the bear case is particularly easy here in the short term. I'm going to go NA for now in the bear case. Okay. Netflix, higher high, higher low, red candle, decreasing volume, a baby gap down here. And so we're looking for an 800 breakout, right? Or a breakdown under 779. Okay, Google, inside bar. A lot of inside bars here today. So we need to see a consolidation breakout, right? So still looking for that 182 breakout or under now 177. And then last but not least here, we got the old VIX, 15 spot 38. So not exactly a tremendous amount of enthusiasm hanging out here. So let's see where this thing wants to set up, right? And where it wants to go. But if it gives me that juice, right, then we should expect, yeah, things to kind of keep perking up here a little bit. So in general, it's a bond market holiday, historically a day that is a lot of inside bars or consolidation. The most recent one we had wasn't that, ended up being a bit of a trend day. That was a bit of an outlier. So we'll see if today is different than that. But we'll know, right? Just based on the volume standard. So if the volume isn't there, I'm not going to pull my hair out and try to like catch a small crappy move. If the volume is there, then I should have an opportunity to take advantage of the PA and I can look to have myself a little bit of joy. We'll know pretty early on if we need to focus on the indexes or if we need to focus on crude. And yeah, we'll see kind of which one gives us that alternative A+ setup. So any questions here, team? Everything makes sense? Anything you guys want me to go over? Let me know. Well, today, Adam, it's going to be based on the volume. So, because on ES and NQ, pretty much we're being told that it's consolidation across the board, right? Basically, besides Tesla, right? Tesla's the only name that's really breaking out here this morning. I want to make sure that I'm seeing that consistent story show up and an increasing momentum standard. So that's going to be seeing bigger volume than what we saw at Friday's open. If I can see that and then cooperation from our leading names, then I know I can focus on the indexes. If I don't get that narrative, then I have a better indication of trending price action here on crude, and then I can look to focus on that. So it'll just be really dependent on which tickers, right, are giving me momentum. I won't actually be looking to trade individual stocks here this morning. I don't trade individual stocks at the moment, not as a day trader at least, ATM. What I do look for, though, is basically making sure that the internals are consistent. So the way I look at it, right, is like when you're in trouble and you're going to go talk to the principal, right, you got into like a fight or something like that. You know, one kid's going to have one story, one kid's going to have another story, and the truth is usually somewhere in the middle. What I'm looking for is for everything to tell me the same story, so that I can generally just trust the narrative that is being sold to me. And the more that I can trust the narrative, the more likely it is that I get a trend day and that I get easy, non-choppy price action to kind of fall in love with. Yeah, that's exactly it. Confluence, Cordell, spot on. And so if everything is telling me chop, I'll sit on hands. I'll not waste my energy. If it's telling me crazy big momentum, then okay, I'll have an opportunity to trade. But again, right, bond market holiday here today. Historically, not a day that is busy, right? Not a day that the market gives us a ton of juice because a lot of participants aren't even in the office today, right? So the big fun traders, a lot of them, it's a bank holiday. you know, and yes, as retail, right? Maybe you have the day off from work, and that maybe is like an opportunity to want to trade more and more aggressively, but that generally isn't, the market's not going to reward you for that. All right, so we have 3 minutes here till market open. I'm going to go make myself a cup of coffee, spend a few minutes here visualizing a successful trading day, and then we'll jump back on here and hopefully set ourselves up for a successful trading session. Be right back to you. All right, so let's get after it here, guys. Let's see how the day shapes up, where that enthusiasm kind of comes together. And let's see where that momentum, right, kind of appears this morning. If I don't get a good amount of juice, right, well, I'm going to sit on hands. I'm not going to do anything stupid, and I'm certainly not going to, like, trade with the tunnel vision. Sorry, I forgot to unmute the Discord. So, how do we feel about the opening volume on ES? Objectively, right? 21 spot 397 versus Friday's 23 spot 2. So, less than Friday. Right? And Q, 9.155 versus 9.288. So we do not have an increasing volume standard here on the 3-minute time frame. We'll see if it shows up on maybe the 5 or the 10. But early doors, not getting much evidence to suggest that we have a quote-unquote increasing momentum standard. And without that increasing momentum, right, that's going to be a situation where we focus more on crude oil versus focus on the indexes. So we'll be patient here. Again, if it doesn't show up on the 3, you can look for it on the 5. If it doesn't show up on the 5, you can look for it on the 10. But generally, right, if the volume doesn't show up early, it's a bit of an outlier for it to show up late. And it's hard to make money off of exceptions, right? All right, so 5-min volume on NQ, 14 spot 468 versus 417. So we do have it on NQ. On ES, 3833 versus 35189. So no volume on ES, NQ potentially in play. So could focus more on NQ here this morning, right, than we can on ES. So already, right, 6 minutes into the trading session, and I know I can refine my focus to be either looking at the NQ, so NASDAQ index, right, or looking for a trade on crude. Now, so far, crude, relatively choppy start to the day. Doji, tight range, so not super appealing. NQ, okay, maybe we could have some joy here. But again, right, base expectation is control the variables I can't control. And so that means, right, being strict with what I'm willing to accept as like that increasing momentum. If I'm still trying to be relatively objective about it, it's not super fantastic that only one of the indexes is giving me an increasing volume standard, right? It's kind of like a mixed bag story between the two of them. So again, I would still probably prefer to trade CL if something does set up here. But I do have the opportunity to trade NQ, right? That is in play. And I don't want to be super aggressive trading to the downside. Obviously, you could have an opportunity, but we have like a wall of buyers, right? From 20,000 to 2,200, 21.2. So that does make it a little bit challenging. to not swim basically upstream, right? We want to swim with the current, not against. All right, so NQ starting to break down here just a little bit, right? But not on the increasing volume that we need to see relative to previous candle. So this still might take a few minutes before we have a tradable opportunity there. Crude not really moving here so far this morning. So again, being relatively patient. And then the divergence between ES and NQ continues. So now we have a volume divergence, right? Where one has quote unquote increasing volume relative to Friday and the other doesn't. And then ES, right, giving us a pretty big green second candle, whereas NQ giving us a pretty big red second candle. So now we need to see an increasing volume momentum, right, relative to previous bar. And we'll see if that thing wants to give us that oomph. The one thing I probably want to backtest a little bit more here. But what we've seen is a lot of the times that first breakout from the opening range, right, even if it's on decreasing volume, ends up being the best entry of the day. So obviously there are examples where that isn't the case. But it feels like a little bit recently, those decreasing volume entries or decreasing volume breakouts seem to be the ones that end up running the most. So we'll see if that ends up being the case here. But that's something to think about a little bit long term. I'm not going to, obviously, like I said, start the day off. I'm not going to make any dramatic changes here today or start to overcorrect for a singular result. But that is something that maybe is catching my eye here, especially if you have that increasing volume at the start of the day. Then you can still make the argument, right, that you have quote-unquote momentum. But that's something to think about here a little bit. Where it becomes almost like a variant of playing that like low vol pullback scenario versus a textbook like breakout or breakdown scenario. Yeah, on the 3-min on NQ, I still don't have bigger volume than Friday's open, right? So this opening candle, right, was 9.155 versus 9.288. So I can't look at the 3-min time frame as that indication of increasing momentum. And then it's the same thing here on ES. I don't have larger volume at today's open versus Friday's open on the 3-minute time frame, so I have to ignore those signals today. I need to see increasing volume on the 5. Right, on the 10, we could also get an opportunity. And then see on ES, 46.092. Yeah, so ES pretty much not going to be tradable here today. It's going to be an NQ or bust, or CL or bust. CL not moving in either direction. So for now, still waiting for that NQ standard. So we got 50 seconds to go. We do have a chance here with this standard. Let's see if we can get there. All right, so now it's increasing. Now target, right, would be 21,195, so not a huge amount of space here. And if that's the case, right, now maybe CL ends up being the slightly better opportunity. We needed to break down under 2,200 probably for us to get a move towards 21. So if I don't get necessarily to 94, that's fine. But if I can get under 200, then I could target 21. 21.1. I find that always such a tongue twister. I've not figured that out yet. I didn't quite do it, right? CL, not fantastic. Okay, well now we're under 2,200. Again, this might end up setting up now as a 10-min setup versus a 5-min. But all I'm doing here this morning, team, right, is I'm just trading the exact strategy docs, right? So I'm just trading the exact standard that's laid out here. Not doing anything else, right, relative to that. So this is my, call it my trading Bible, right, if you want to call it that. So I'm unwilling to take exceptions to this. Generally, when I find myself taking exceptions, I tend to get in trouble. And again, I don't care that this is moving without me, right? It's got to move exactly following my rules or not at all. I will not hold it against myself that I don't chase price action that doesn't follow my rules perfectly. That ends up being like, I don't know, self-induced torture, right? Because then you're like getting mad at yourself for not breaking your rules. And that's I don't know, feels like self-sabotage, right? Hiding as greed. Okay, yeah, so far so good to avoid crude. So see if the 10-min can give me an increasing standard. If it does, then we've got a good amount of space down towards that 2R range. Again, would like to see it hold under 200. But so far, not missed out on anything yet. And then one thing that I have been thinking about here a little bit, so we go into the opening range logic cheat sheet, right? We have the 3 variants. We got the high vol breakout, we've got the low vol fake out, and then the low vol pullback, right? The low vol pullback scenario might be or it has been probably the more tradable opportunity, right, recently. So when you get those breakouts, right, low vol breakout and then a pullback right into VWAP, that maybe is the better opportunity recently. So that might be a way of trading some of this price action here if we're not able to get those aggressive entry techniques. doing trades into pullback, right? And then using doing trades into VWAP as a pullback, right? Low vol pullback, and then using VWAP as a binary entry logic zone. Now, I don't know if I necessarily see that scenario in play here yet. I mean, this is starting to look like it could be a reversal candle more than anything else. But let's see how she goes. So again, doesn't look like the 10 min's going to hold under 200, but that would be the starting point here for a breakdown. Okay, I just jinxed it in the right way. Sorry, coffee went down the wrong pipe there. Ooh, I'm alive. We're okay. All right. So let's see if this thing closes under 2. And then if it does, right, we're still going to be looking for this pullback scenario here. And then again, guys, right, very important. In between this red line and green line, right, this is your entry zone. So don't take trades under the green line, right? Make sure it's back up above it, not below it, right? So if you want to make your entries binary, you got 2 options here. A retest of previous low of day or a retest, right, of the green line. So once you see elevator down, right, stairs up, those are your 2 options. And then if your job, or if you're waiting for me to say that I'm in a trade, wait till you hear my price and then click limit, right? Or set up your limit order to be that same price. Just because I'm in a trade doesn't mean that you should chase it outside of that 186, right? Or below that 236 fib line. All that does is it means you're going to lose more money when you're wrong, right? And make less money if you're right. And that's not a winning formula. All right, so we map out these zones for a reason. Please do not ignore those standards. All right, so as is, stop loss would have to be 202.25. And we need to see elevator down, right? And then a pullback, still not elevator. So at 186.50, that would be 1 contract, right? If I can get elevator down and then pull back into low of day, which would be, 191 approximately, that could be 2 contracts. So again, still no reason to jump in here and enter. We've not gotten the perfect reaction here as of yet. And again, base assumption here today is chop until proven otherwise. So I'd rather be too patient and size down, right, and get the 186.50 entry, than trying to front run this idea and trying to get the 191 entry, right? Okay, better reaction. And so then when I'm looking at trades, right, and I say I'm starting to look for an entry, I'm picking a spot here, right? So I'm either picking the green line or I'm picking low of day or around low of day as my target, right? So now let's see. I'm looking for a 186.50 with one contract. Now potentially a low of day, previous low of day. And again, that pullback into those zones faster than I would like, right? So still no reason to have jumped in. And if it ends up being a slightly longer developing trade where it's that VWAP entry, then stop loss would be high of our confirmation candle, right? So it's 9:54. We have no 10 a.m. data today. So starting to watch here again. Be one contract at 186.50. So all I'm watching here, right, is the enthusiasm of this PA. And I have my price set to hit the bid. So I'm just waiting for that reaction inside my, between the lines, right? All right, and I am in now at 187 entry. And again, there's your retest, right, of 187. So if you waited, you would have still gotten that exact same entry price. So instead of chasing me, right? All right, see if we can break down here. Survived worst case scenario. So again, maybe a little bit early on my entry here. Great entry. So I will always say great entry when it's above that 236. I will always say it's a bad entry, right, when it's below that 236 in this context, right, when we're short. So that's binary, right? Good is when you get a discount based on your risk reward. Bad is when you take too aggressive and you're oversizing, right? All right, so let's see if this thing can break down here. So far, so good. And let's see if this candle can close under 180. Right, preferably lower than that. And then again, one thing I'm trying to kind of be obsessive over a little bit inside this chop is managing expectations, right? So not allowing wins to turn into losses and not trusting that every loss is going to turn into a win. So far so good here, right? So far so good. Let's see if we can get a bit more follow through. We're realistically not going to get a chance to pyramid into this position because it's going to be decreasing volume. So let's see if this thing can keep breaking down. But so far so good. Again, might have jinxed it. Well, I'll have my finger on the trigger here, right? On the X button to close my position if it's wrong. I'm not going to place a stop loss until I get a close, right, that's justifiable. Intra-trade, right now I still have my stop loss at 202.25. And I've got two reasons to get out of this position, right? So if it closes up above 180, I will close. If it pulls back towards my entry price, I'll look to close as well. So I've got two catalysts in my head, right? But I'm not going to try to set up another order here right now and modify things or whatever. That's not the way I personally manage it. If you prefer to, awesome, do it, go for it. But for myself, I just have my finger on the trigger, and if I see a bad reaction to price action, I'll just click X and get out at market. For me, prematurely stopping myself out because I'm like too paranoid about it going red, it's super frustrating to see it then go green, right? So there's kind of like a fine balance there, or a fine line you want to walk. And for me, that's the way I do it. So I've set myself a target. It's got to close under 180. If it doesn't close under 180, I will just take it and reset. But that's a good close here, right? That's a good close. So on the first candle, right, I never want to overreact, right, to the reaction of price action on my entry candle. Now, if the move happens faster than I expect, then sure, right, I can look to close that and move on. But sometimes a little bit of a fight right before you get the move isn't necessarily an indication that you're wrong, especially if it's not really like fighting above your entry price. So I was happy with the $350 worth of risk or whatever it was. So I'm going to be happy with that, right? Within that first candle pretty much always, unless I get that like move towards 135 or whatever it is, right? But for now, no reason to have done anything aggressive. It's turning into a nice little win. And let's even keep giving us some further follow through. Now, a dramatic fake out under low of day would again, right, be a reason to close this position, because that's not how you'd expect strong bears to look like, right, post entry. Now, it's not enough to call this a dramatic fake out here yet, but let's again be cautious here. So I won't let this trade go red now, but I want to find that balance between trusting my thesis, right, and not panic closing this. So stop now, right? And it's going to be a mental stop for myself still. It is going to be at my entry price. So this is a $500 win here to start the week off. I won't complain about that, right? So let's see if we can keep going. And then just with that like execution process, right? With how now you're going to protect your position, don't overestimate your ability to basically behave how you say you're going to behave if you have no evidence to suggest that that's actually correct, right? So if you struggle or you go on tilt when you see your trades go from green to red, set a hard stop loss, right? Protect yourself. Be selfish. So just because I execute my trades in one way doesn't mean that that has to be the way that you execute your trades as well, right? If you want to set your stop loss here to be at 179.25, I have no issues with that, because it's about building up that trust in yourself of behaving how you say you're going to behave. And you can take out like a lot of that anxiety in your decision by making that binary, right? Which is what the point of a hard stop loss is. So this is the point, right, where you have to be incredibly honest with yourself. Right? You can't lie to yourself and say, hey, I'm actually better at managing my winners, right, than losers, when your journal has no evidence to suggest that that is the case. Right? So we can lie to everyone but ourselves. And it's the more honest we can be, the higher standard we can hold ourselves to, the less BS that we're willing to tolerate from ourselves. Easier it is, right, for us to be green long term and actually build up those habits that we want. So again, so far here, I've not seen anything here that needs to tell me I need to close this position. But I also haven't gotten a ton of evidence to say that, hey, this is a $30,000 win, right? Now, that's obviously a little bit dramatic, but let's see if this thing can continue to close. Now, we still got 5 minutes left in this candle, so I'm not ready to define a new area. But if I'm going to be like thinking ahead here, I would like to see it close under previous low of day, right? Yeah, no, those big wins, Bert, come from a consistent, repeatable process, not by swinging as hard as you possibly can. So the more consistent I can be in my execution management, right, the easier it is for me to be nicely green. And this is okay, a $600 win. I got 6 accounts I'm trading this across. That's gonna be a great day, right? So let's see if it's still got some juice here. Yes, sir. I passed an evaluation, another evaluation last week on election night. So now we want to see it hold under 162, right? That's going to be the starting point here. We got 3 minutes to go here, right? We got 3 minutes to go. Let's see if it can keep breaking down. Again, a little pullback here above 162, not a big deal. If it makes a higher high, okay, then it starts to get unrealistic that we're going to get follow through, and you get out. So 3 minutes to go, still lots of time. So everyone clear on what my plan is here? Everyone clear? All right, good. And again, price action is just moving the same way that it has moved so far all day, right? I'm looking for a close below this red line Adam, right? So this 10-minute candle needs to close below that red line. If it doesn't, I will get out of my position. Below, I'll look for continuation towards 135, right? Towards that white line. Okay, so minute to go here. It's got to sell off 20 points. Probably a little bit unlikely. So, going to look to get out of this position here in a second. Come on, a little bit lower. All right, guys, so I am out of this position. Closed at 182. Closed at 182. Okay, right? So it failed to continue that breakdown. Not going to get emotionally attached to that position and take a small win. Not a big deal. Nice work, Jeremy. Okay, right? Instead of hoping that I'm going to get lucky and get, massive follow through here, defined what we wanted to have seen, gave it as much time as I possibly could have, right, to give that follow through, and it didn't. So I took my small win, moved on, right, and just traded my plan. So I'm not going to let the market chop me out. I'm not going to feel bitter about following my rules. I'm not going to feel any of that stuff, right? So, Frodo, if you got stopped out at 202, you weren't listening for the last 10 minutes, right? That should not have happened. We made the plan crystal clear over how we were going to manage that trade, right? Again, that shouldn't have happened either. You should have stopped out for a win on that position. You had plenty of time to close it before it would have got back to your entry price. So I would say that that is an unacceptable outcome. And you need to think about why you were willing to get so greedy there. Nice work, Jen. Fantastic work. It doesn't matter that it's doing this now, right? It would have stopped us out on every reasonable scenario that we had here, right? So you manage your trade, you take your small win, you reset, you keep that mental capital, and you don't allow yourself to get frustrated. What is frustrating, right, is making mistakes that cost us money when we should not be making those mistakes, right? So there was no reason for anyone to have either lost money or made, +5, -5, right? Everyone had a chance there to make at least $100. Nice work. $670, perfect, right? Traded your plan. That's exactly what you should have done. Well done. It's a great day, Cordell. Nice work. So I'm up, $98, $50 per account. And okay, it was up a little bit more than that. Maybe I should have taken profit when I was up 500. Fine. But there's that balance, right? Balance between trading your plan and trusting your thesis, right? Versus panic closing and rushing things. There's pros and cons to everything, right? Not every win's going to be a monster. Not every trade's going to behave exactly how we want. Right? There's going to be trades where we get shaken out. There's going to be trades where we get faked out. That is a part of the game. If we're not making a plan for how to manage that so we can at least take our little paper cut wins, then we're not buying ourselves time, right, to survive our paper cut losses. So is a $98 day something I'm going to go and text my dad, hey, Tom, oh my gosh, you're never going to believe what happened today. No, of course not, right? But what I will do is I'll write down in my journal, okay, here's the mistake I made. I can start to track yada, 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 right? And if it doesn't start to, if I start to build up the evidence that I'm constantly leaving money on the table and that I'm letting too many wins turn into losses, well, now all of a sudden, right, I can see what point of my entry or what point of my trading is starting to break, and I can fix that pain point and solve it, right, and fix it so that I'm more and more profitable. But it's the consistency in your behaviors that create the outcome that you want. When you're going to do one thing, one trade, one thing, another, all you do is hide the patterns that cost and make you money, and you're never able to actually be profitable off of those ideas. So if you lost money on that trade, you need to ask yourself why and how that happened. The plan there, I think, was exceptionally clear. We wanted it to see it close under 170 or 172, whatever it was. It did not do that. To then wait for a 20-point pullback from that area to close your position is not acceptable, right? That is greed, not trading your system. So make it easy for yourself to be green, right? Even if it's just $100 day. You build up confidence, right, by behaving the way that you say you're going to. Don't allow that greed to cloud your judgment and thinking that this time will be different. Because if you break your rule, you see it stop you out at 207.50, right? Or you ignore your stop loss, and then now it's at 180, 175. Now you're on max tilt because, oh my gosh, well, if I didn't break my rule about breaking my rule, I would have made money here today. And then you put yourself in a pretzel. and you don't know how you're supposed to behave or why you're supposed to behave that way, right? So it is the consistency in our behaviors, the consistency in behaving the way that we say we're going to behave, that makes us money long term. And if it's $100 day to start the day off, fine, that's whatever, right? Across accounts, that's $600. $600 is more than most people make in a day, right? So stop like pretending that that isn't enough. It's not the dollar figure that we're chasing, it is the quality of our process. And when our process is solid, even small wins are actually pretty significant P&L days. Like $600 a day, it's what, 15 grand a month? Like, that's good money, right? Like, if you can't live off of 15 grand a month, you don't have a money problem, you have a spending problem, right? Yeah, it's great. But in the moment, the market makes us feel as if that isn't significant enough, right? So we can't let our greed trick us into making decisions that are objectively suboptimal. So yeah, I am disappointed at the people that got stopped out at entry price. You should have closed your trade earlier. And I think I was very clear over what the plan was to make sure that you weren't getting stopped out for a loss. And we talked about, right? If you're struggling to close your positions on those pullbacks, that should be the scenario where you're setting up your hard stop losses and not relying on yourself to make a decision. Make that decision before it ever becomes one, right? Be proactive, not reactive. And build up your level of tolerance to be able to manage trades more objectively. Just because I'm willing to click X doesn't mean that you are good at that either, right? So I need you guys to be very selfish in that process, because you can look at the chat here, right, in the Discord. The people that were the most selfish in how they managed their position and their account made the most amount of money here today, right? They set themselves up to be more profitable than by allowing their greed to get in the way. So for those people, right, I'm giving you like the polite golf clap, right? That's exactly how I want to see you manage your positions. Exactly how I want to see you trade. Try to maximize your strengths, right? And protect yourself from your weaknesses. Not try to protect yourself from my weaknesses, right? Or my strengths. We're all in this together, but trading is fundamentally selfish because price action makes all of us feel something different. So instead of torturing yourself, pretending that you're not got one problem or that you don't have this strength, double down on the things that you're good at, right? And double down on protecting yourself from the things that you suck at. From my situation personally, I'm good, relatively, right, at taking small wins. I'm okay taking them. They don't bother me. But this has been a habit I've been building for a decade, right? Like it was hammered into me by working institutionally and having all those processes and rules in place. And then it's been hammered into me by seeing the decisions I make after I let trades go from green to red. So I have a decade's worth of evidence to suggest that, okay, I need to do this, I need to do that, and so I behave that way. But you need to build up that confidence for yourself, right? If you're going to trust your technique. Okay, if this thing breaks down, if it continues to give us follow through, no worries, no biggie. Honestly, don't care. I don't hold it against myself when price action moves without following my rules. That's just the easiest way to basically lose your mind in this game. Right? When you start to give the irrational power of the market power over you, you start to get in these feedback loops that are impossible to recover from. Is that understood? So I will share with you guys absolutely everything that I'm doing, right? The highs, the lows, the good, the bad, the ugly. Right? And we've seen plenty of that here over the last 3 years. But if you want to be truly successful, is you got to make it your own, right? So it doesn't mean you have to be like if you want to make it your own, right? That means being deliberate with your executions, right? That's what that means to me. Chasing my entry just because I say I'm in a position is not deliberate, right? Or it's a deliberate way to lose money. All right, we want to be deliberate in our ability to make money and protect our profits instead of being deliberate in setting ourselves up to lose. I don't want to be a loser. Talked about this on Friday. Losers behave like losers, right? Which I know, what does that mean, right? It's kind of one of those like BS statements about the market. But what that means to me in general is that people who are losing traders are like addicted to a level of self-sabotage that winning traders are unwilling to accept for themselves, right? So winners make it easy to protect themselves from their mistakes. Losers make it easy to basically compound their mistakes, right? That for me is the difference. So we can watch here crude on the 3-min time frame. We need to break down and hold under low of day on increasing outlier volume, and then we can have a setup here to the downside, right? Which would be a trend continuation narrative. Any issues here this morning with the quality of the stream or anything along those lines? I made a few changes to my computer over the weekend to hopefully improve performance. Awesome. Okay, so with crude, we'll be targeting a move towards 68. So we got 20 seconds to go here. This is clearly going to be enough volume. Now we just want to make sure, right, that it looks like candle most bearish, second most bearish, normal body bearish. We don't want to see it be indecisive here, right? Okay. So targeting a move towards 68. And let's just be patient here, right? See where it finds support. And then if it can break down. So for now, stop loss would be 68.28. So I'm setting up that first inside my execution window. Right? And then 68.21 is both the 236 fib level and previous low of day. So I'm looking for elevator down, right? And then a pullback into 68.21, which means I could buy 7 units Right, okay, now it has to be a different stop loss. Now it has to be 68.30. So now my sizing have to get smaller. Now I'm buying 5 contracts, right, on a breakdown here. So now looking for a 3-cent pullback or 5-cent pullback into 23. Okay, I could buy 7 units again. All right, so I'm in 68.23. Let's see if it can break down here. And again, right, if you didn't get that initially, well, it's pulled back to or below that price, right, multiple times here. So again, right, if your objective was to chase, you're never going to get paid out for that, right? So let's see if this thing can break down here. Give me some follow through. Let's see if it can flush. Okay, decreasing volume post entry. So let's see if we can die here. Okay, so let's see if it can go. So far, so good. A little bit of a slow mover. Okay, if we can flush through 15. There it goes. So let's see a bit more enthusiasm. I don't like that bounce. I don't like that bounce at all. Let's see if we can keep going here. Again, it's increasing volume, but it's kind of a fight at this level. So I like to see it flush, right, and make that move. Otherwise, I'll take my $450 win. and reset. Not a great feeling. All right, guys, I am going to look to close this position here. So I can just get a little pop lower. All right, sweet. So I'm out at 20. I am out at 20. $210 win. Right, so high volume indecision is the worst decision, right? It's one of my favorite sayings of all time. So take the small win, move on, right? And again, if you don't get the exact reaction that you want, don't get emotionally attached to the trade. So now, okay, it's a $300 day. It's not bad, right? $300 per account. I've done a lot worse in life. So you be objective with your trading, you be objective with your entries, be objective with your position sizing, and you don't allow things to cost you money. Okay, sure, probably left a few dollars on the table here today, but I've not allowed winning trades to go into losing trades, and I've given them as much time as I can possibly give it to follow the plan. So no complaints, right? No complaints. So, okay, scrappy trading here so far today, but we're 2 for 2. We're not allowing things to go. Yeah, I don't have a bull case today on NQ here with this volume standard. The volume has been indicating bearish control here pretty much all morning. And everything else is looking pretty bearish. So I'm not going to look to play this reversal here. It's not enough enthusiasm for me to justify it. Realistically, I've taken 2 trades here so far today. It's 10:35 in the morning, and both trades have been not only choppy, but they've been sloppy, and they've not given me a tremendous amount to follow through. So if that has been the case for 2 trades here so far, I'm not sure that the next trade I'm going to take, right, is going to behave any differently than that. Right? Markets are going to behave like they always have until proven otherwise. We don't really have that proven otherwise here today. Right? Because if it's reversing, look at the daily bar, right? So we talked about all morning here today that, or in the pre-market, right? On these bond market holidays, the most likely outcome is chop/consolidation. We've had 2 opportunities to play a possible trend breakdown, right? Or quote unquote trend day. And neither one of those opportunities have really played out. And then we look at the indexes and both of them are disgusting, right? Like this is doji, pretty low volume, not exactly very enthusiastic price action. So I don't know if I have anything here that tells me it's a non-chop day, right? A increasing volume mean reversion setup into a doji, it's not worth the smoke, in my opinion. So I'm happy to just take my $300 day and move on. Does that make sense, guys? So it doesn't matter that this is an increasing volume standard. I need things to match my pre-market plan, right? I'm not chasing every increasing volume candle because that's a mentally draining way to trade, right? I'm chasing trades where I have a expectation of being profitable based on back-tested information and then volume confirmation. So realistically, I'm not sure if I'm going to place any further trades here today. 2 for 2. Not a huge amount of upside. Maybe should have been up a bit more than I am. But again, it's finding that balance between protecting profits, right, and trusting your thesis. Sometimes it's a hard balance to find. Yeah, sounds good, Jenny. Oh, how was Whistler, by the way? Yeah, it's so beautiful, right? That's awesome work. Hey, $570 per account. That is awesome. How many accounts is that? Hey, $1,000? Kidding me? That's incredible. Right? So, I mean, at that pace, and this is a slow move, that's $20K a month. Oh, don't worry, Jenny. Don't worry. So again, this is why we don't want to chase those mean reversion setups when we don't have that volume support from the previous day, right? Just ends up being a fake out scenario. So again, all we've done here today is trade this document, right? The DTR strategy docs. That's all we've done. And we've just followed it to the T. We've treated it like our Bible here this morning. And that saved me a lot of mental capital, right? So if you want to call it, I'll call it my commandments, right? And when I follow them to the T, when I trust that technique, I make good money. When I ignore it, I get crushed. And that document is not like random, right? It is the result of years of experience, hundreds of hours of backtesting, right? And months and months and months of stress testing trades and realizing those results. So when I maybe have like a little bit of a slump, right? Or feel like I got my butt kicked by the market, which isn't the reality last week, right? Last week was still a green week, but there was opportunities where I felt like I made some mistakes. And you go back to basics, right? You go back to the boring fundamentals and you execute those with excellence, right? You choose to follow your rules like a lunatic. And when you do that, yeah, you kind of like reground yourself, right? And you get back to being profitable. Yeah, I feel pretty good about not chasing this move higher. Just saved myself money today. So any questions here, team? Anything that was unfamiliar about my process here today? Or how we wanted to trade, the price action? Any questions? Anything along those lines? I don't see myself placing any further trades here today. I've just logged out of my Trade account. Going to log out of Top Step X. I'm going to close my IBKR. Nice. Awesome. Sounds good, Adam. Hopefully tomorrow's a little bit more of a trending day with the bond market holiday here this morning. We're not expecting anything too crazy. And for me, Jeff, right, what I like about today, and although it's not like a perfect day by any means, is that I didn't allow the mistakes I made on Friday to be repeated again on Monday, right? And so that for me is ultimately very, very positive. Instead of overreacting and all sorts of stuff, we don't make any dramatic changes. We just make sure that we're playing within our borders, right? We're coloring in between the lines. All right, so time to fill in the journal here. Yeah, it is. If you go into the daily debrief channel, it's the pinned message inside that channel. All right. Any other questions here, team? Any other questions here? Sounds good, Adam. Have yourself a great day, man. Enjoy, Jeff. Enjoy, Jedi. So, Frodo, right, just for tomorrow, I want you to have a better plan on how you're going to protect your winners so that even if they pull back, they're still winners. So I want you to think about that a little bit. And how you're going to make it easy for yourself, right, for that to happen. Understood? Enjoy, Greg. Yeah, so maybe think about, okay, when it's you make a plan, you start using hard stop losses in those areas, right? Or you move your stop loss up to make sure that it happens. But I want you to build up the ability to basically have a mental stop loss, right? Don't trust yourself that you're going to make it work because, yeah, our greed tends to get in the way, right? Until we can build up that muscle memory of doing it. And I don't want to overrate not only my ability, right, but your ability to be able to do that. So be selfish here. Protect yourself from that greedy a-hole that likes to cost you money. And then slowly build up that tolerance to be able to get better and better and better. We don't have to be perfect traders from day one. We just have to commit to getting a little bit better each day and make it easy for ourselves to get that improvement. All right, team. Well, good trading day here so far. Managed the chop relatively well. And we'll see basically how markets want to behave rest of the week. But that's a good start to the week. Won't complain about $1,800 day, you know, across all accounts. That's not too shabby, right? And we'll see if we can keep kind of compounding away here, finding a few more dollars, and set ourselves up for a successful week. But for me, it's just about going back to the basics, committing to the quality of my process, not chasing the outcome. And the more and more I obsess over those variables, the more and more I commit to myself, I'm just going to follow my rules. And the more I get addicted to that positive feedback loop, the better everything goes long term. So that's the plan here for the rest of the week. And yeah, looking forward to trading with you all and hopefully having ourselves a fantastic performance. So have yourselves all a fantastic rest of the day. For those of you who've got one-on-one calls here with me later this afternoon, looking forward to catching up with you then. But in the meantime, have yourselves a great session, and we'll talk soon. Peace.